Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Welcome into Life Planning 101. My name is Angela Robinson with Kennedy Financial Services and Smart Money Group out of Eastland, Texas and Three Forks, Montana. I'm going to have to get used to saying that. Yes, we actually opened the office last Thursday with our open house. It was a wonderful event. Lots of fun. We were able to actually zoom in virtually to the Fort Worth, Texas dinner. And we are officially up and running. Today was our first meeting in the office with a family who we have served here locally for years. And we're so appreciative of all the people here in Three Forks that have been a supporter to help us get this office up and running. And it's like I told the family today, it isn't without them that we'd be doing this, because they have introduced us to other families here, and that is how we like to grow at Kennedy Financial Services. It's such a benefit to us, but it's not only that, it's a benefit to you, because the more introductions we have, the less time we have to focus on trying to grow our business marketing and sales, and the more time we can focus on empowering you to be able to make great decisions about your future and oftentimes your present. No matter what it means to live life on purpose. And that's what we're here to do today on Life Planning 101, help you live life on purpose. So, little known fact, and I say this is a little known fact because I doubt you've seen anything on it, or if you have seen anything on it, it hasn't registered because you get so many messages a day. But September is Life Insurance Awareness Month. So, that's what we're going to be talking about. Do I need life insurance or more of it? And really, that is a great question. It's a great question. Even with the family we served for all these years today, I was answering that question. And it is estimated that 102 million Americans, which is about 42% of Americans, say that they're either uninsured or underinsured. And that comes from a LIMRA study in 2024. Now, I know that may sound scary, and really it is, but that isn't even the scariest part. The scariest part is that is a self-diagnosed stat. Did you hear what it said? Americans that say that they are either uninsured or underinsured. How do you know if you're underinsured? I mean, if you're uninsured, that's easy, but how do you know? So my bet is that actual number of uninsured Americans is far higher. And that's what I want to talk to you about today, is just to be able to give you some education, give you some information to empower yourself. And then we're also going to talk about the cost of insurance, because I think that's something that's a misnomer. And I try not to narc any other part of the industry too hard, but I am going to narc the captive companies on this one, because they're always trying to sell a permanent policy, and permanent policies are expensive, and they are really not always the best solution. Now, I'm not saying that they aren't sometimes the best solution, but I have seen far too many times people come into the office and they say, well, we got rid of that term so we could buy these two permanent policies, and the policies will be $100,000 a pop, when the term insurance was $500,000 or $1 million. And I hate to say this, but I was visiting with John McConaughey, fellow advisor in the firm, the other day, and he has a very dear friend that he was just praying and hoping did not cancel or wasn't sold to cancel his term insurance for replacement of a whole life insurance after he left a captive company. And I think that's really important to understand, that sometimes just being able to have the insurance itself, no matter what type it is, the right amount, the right coverage, is more important than just having some. So again, self-diagnosed stat here. And that's really the scariest part, because 4 out of 10 Americans, adults, are saying that they're underinsured. And how high is that number really? Ooh, eek, ooh, ah, ee. It's not even October, and that's scary. So let's get to it. Let's talk about, do you need more life insurance, or do you need life insurance in period? And I want to talk about what $1 million is worth, because, and we do have, many times on the show we've brought this up, and I want to hit on this today because it sounds like it's a lot of money, and it is, but it really isn't. And I want to put that number in perspective. Okay. So let's suppose that you bought $1 million life insurance, $1 million of life insurance, and died. What kind of income could your spouse expect to receive from that? I mean, obviously that's the question, right? A lot of people look to pay down bills, pay off debt. All that might be important and it might be part of it, but does your spouse need an income to continue? And 9 times out of 10, when you're dealing with younger families or those that are building for their retirement, the answer is yes. And even those in retirement that need life insurance because maybe there's a massive pension with a bad survivor benefit, or maybe there's some other holes because of an expected inheritance. And if that didn't come through, that you need to fill those gaps. And you're talking about more income replacement than you are anything. So today we're going to talk about income replacement. Now, I am going to give you a tool at the end of the show, spoiler alert, that will help you walk through, paying off debt and looking at how much you need from another perspective. But for the purpose of the show, I want to talk about income replacement because here's the thing. I've never met a husband and wife that have been married till they get to retirement and they love each other less at retirement. Now, before then, it might be, you never know. I mean, everyone knows the divorce rate in this country, but we all will say we've been pretty blessed inside of our firm. With far and few between divorces. And I think that's just due to our God-fearing culture. And again, thanks to you, kudos to you, all of the families that we serve, and you introducing us to other great families out there. But nonetheless, you buy life insurance because you love someone. And if you love someone, you want to be able to help take care of them. And if you want to be able to help take care of them, well, what does that really mean? Just pay off debt and then let them go back to work? Or, if they're trying to raise 3 kids, do you want to provide for that? And by the time the 3 kids are grown, they've been out of the work industry for 15 years. And how are they going to go back into that work industry? What's that look like? Are they able to make the income that they want them to make? What are all these things, right? So there's tons of things to think about here. And I think it really, if you look at it from an income perspective, it clears it up pretty well. So let's go back to that $1 million because I kind of got off on a tangent, didn't I? Well, what kind of income could your spouse expect to receive from $1 million? I'd say that depends. I know that was the answer you were looking for, right? No, here's the deal. First and foremost, do you want your spouse to run out of money at some point? So in other words, do you want to provide an income for a certain period of time, or do you want that to be maintained throughout his or her lifetime? Second, do you want the income to keep up with inflation? I used to have to explain what inflation was. I don't feel like that's necessary in 2025. Perhaps it's because every time I go to the grocery store, my bill gets higher. And I'm pretty sure I don't buy just a whole lot more on that bill. I remember, okay, I'm going to tell on my age a little bit here. I remember when people used to call Walmart the Century Store. So I was in high school, college around that time. And I remember I could never spend $100 at Walmart unless I went over on like the clothing side or sports side or something. It's like $100 to be able to buy your groceries and your toilet paper and all these things. And I'm also telling on myself that yes, in Texas, that's where we shop. Walmart people. Anywho, but it used to be called the Century Store. I can't walk out of Walmart with $100 to save my life. There's no possible way. And yes, I know I'm raising 2 growing boys, but even if it were just Brett and I, that's crazy. So we all know what inflation is. What's it going to take to keep up with inflation? And do you want that $1 million to be able to do that? Then you got to think about, will there be any extra expenses that these funds are going to need to provide for from time to time? College expenses, for one. Weddings, something that's often left out of financial plans, by the way. Down payments on homes, or any gifts of any kind. Think of those things. So someone in their 30s, their 40s, or their 50s, okay, and this is a wide range, so I'm going to give you a wide range, may be surprised to learn that a sustainable income that works to keep pace with inflation would land them a mere $30,000 to $40,000 a year. I'm going to repeat that. $1 million equates to $30,000 to $40,000 a year at most. And it's not guaranteed. What are you thinking right now? Well, if you're not thinking about what you earn currently, I want to direct your mind there. If you died, how much income would need to be replaced? Let's say that you're making $200,000 a year at the age of 45 and you hadn't done a great job saving for retirement. Okay? Yeah, I probably need to change that too, but that's a different topic for a different day. $200,000 a year. If you want to provide for your spouse, you might need $5 to $7 million of life insurance to replace that. Is that a lot? Well, not if you think your income is a lot. You getting the gist here? Yeah, $1 million ain't what it used to be. Ain't what it used to be. I think there's a song. Now, I want to talk about something else because you hear that $5 to $7 a year, $5 to $7 million, and you're like, oh my gosh, that's crazy. I could never afford that. Messed up, and you just give up hope. Well, I don't want you to give up hope. Don't do it. Don't do it. Let's talk. Let's talk cost, okay? Because this is Life Insurance Awareness Month, and what this is about is to educate you. And if for no other reason than just to look at your situation, make sure you have what you need or your family would be taken care of. And if you can't afford to be able to do that, you have a plan in place to do it. That's important. So a lot of people, though, before we dive off that end, a lot of people are surprised to learn just how inexpensive term insurance can be. Now, there is a time and place for permanent insurance. I mentioned that at the first part of the show. And trust me, there's definitely a time and place for permanent insurance. We do not exclude that from a plan. And especially if you're looking at things to address disability and a long-term healthcare event, there's other ways to look at life insurance and permanent products in that way, or estate planning and all these things. There's important parts here, but I don't want to digress down that path. And here's why. Because I want to talk to you about getting enough. Remember, the first part of this show is getting enough. Yes, if you're actually doing your insurance planning and you're looking at your situation holistically, that probably should be considered, that maybe a piece of that is permanent. Maybe it's not. Maybe you don't need it at all if you're doing everything right. You never know. But today, we're going to look at that inexpensive way to fill what may be the largest risk to your family's financial health. That's the point of this. So let's look at the 45-year-old man. I mean, I kind of picked the upper end here of, taking care of a family. Let's look at that 45-year-old man and assume that you are in decent, not great health. $1 million of term insurance. Term. And by term, I mean, you're like renting the death benefit, right? When the term's up, you're done. Term insurance for a good number of years here. Okay. And this is where I want you to realize how long this is actually going to cover. It's 20 years. So till you're age 65. But for a 45-year-old man, $1 million of term insurance with a solid insurance carrier at Current, that can change, of course, and a few other very important perks, such as the ability to convert that policy, which we'll talk about here in a second. That's important to any permanent product. Or the ability to use the death benefit for chronic care, part of the death benefit for chronic care. All these things are very important. It's not just the cheapest policy on the market. That type of policy would cost you just over $170 a month. $1 million. Okay? A woman with the same health would be a little over $130 a month. So here's my question. What is $1 million more to help take care of your family? There is no reason to be underinsured. If you're making that $200,000 a year, there's no reason to be underinsured. So here's my suggestion. Okay? Number one, I want you to find out how much life insurance you need. How are you going to do it? Well, there happens to be an app for that. It's been around a while. Life Happens. It's an organization and it's wonderful. And it's dedicated to helping people have an awareness about life insurance. And it has this amazing little tool called the Life Insurance Needs Calculator. It walks you right through it. And I suggest that you take a few minutes to do that. Provide us with the results. This is your second step, and we'll help you build that holistic plan to fit your needs and goals. Like I mentioned earlier, cheap when it comes to insurance can be quite scary. Okay, first of all, if that insurance carrier doesn't survive as long as, it doesn't mean that you necessarily won't get paid. Most of the time, I mean, the way the insurance business is built is that if a carrier were to fail, the other insurance carriers never want to say, well, there was this insurance carrier that failed and they can't live up to their promise. So most of the time that would be backed. I mean, it is still a risk. But the reality is that if that insurance carrier was moved over to another policy, or in some cases, these policies are getting sold off to private equity firms that don't care anything about you, that's not necessarily a good thing for a few reasons. So you can be cost conscientious and not cheap. And it's critical to know the difference, and it's critical to know what you're looking for, because it may mean a few dollars a month to know the difference and a cost to you. And the cheapest insurance, I'll go back to our example earlier, may not include the ability to convert to a permanent product. So what does that mean? And why is that important? Let's just say this. Let's say, worst case scenario, you are diagnosed with something that your life expectancy now was just reduced to about 5 years. And your term policy ends this year. Now, here's my question. Would you want the ability to keep that policy in place at a non-ridiculous price? Okay, now there are things that you can do to continue to have that insurability, but the price of the premiums go up exorbitantly. And what if you live longer than 5 years? It's may become almost unaffordable. But if you have the ability to convert that policy to a permanent policy, and better yet, to be with a solid carrier that has options for those conversions, then that negates that. Because you got to think about this. If you were to have 5 years left and your term policy were ending, what would be your regret? Not be able to keep that policy in place, I'm sure. So the other way is just simply not a benefit for the cheapest insurance product on the market. And that's just the bottom line. So with all that being said, September, Life Insurance Awareness Month. Our hope is that you're going to take a moment to say, I love you to your family, because that's why you buy life insurance. It's not for you. Take a moment to say, I love you to your family, and look at your own situation. And call us if you need help. We are definitely here to help. And visit us online at www.kennedy-financial.com. My name is Angela Robinson with Kennedy Financial Services and Smart Money Group. God bless you. Have a wonderful week, and join us right here next week on Life Planning 101, where we're helping people live life on purpose.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Don't forget to learn how our sister company can assist you with all of your tax and consulting needs. You can find out more at briscoeandassociates.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.